Hey, my name is James Nicholson. I hope you are well. In this video, I want to talk about interest rates. What are the predictions? What are the rates on the market right now? We did this last month and it was one of the most popular videos for the whole month. So we're going to do this as a monthly thing while there's so much turbulence in the market. We're going to look at residential interest rates and we're going to look at buy-to-let interest rates as well. I'm going to split it out this time thanks to the feedback from you guys in the comments last time. So if you have any feedback or comments, then do comment below as we go through this. And if you're new here and you haven't subscribed already, do subscribe and hit the bell notification. We've got new content every single day, useful information that you can use to implement to grow some property wealth. And while you're here, make sure you smash the like button. Go on, smash it over there now. That really helps us with the YouTube algorithm. We want to try and hit 200,000 views this month. And we're going to hit 1 million views in total for the whole channel growth this month, which is crazy. So thanks to everyone that watches. So what is going on? Well, this is a good month. I think this is a decent month. We had a pause with the Bank of England, which was good. And then the swap rates got slightly better temporarily. Then they got worse. And the swap rate is what the banks actually borrow the money at. So what interest rate do they pay? And that got good. Then it got bad. But the rates they're giving us are continuing to improve. You see, what's happening is transaction volume is down massively. And less houses are being sold. Less people are moving deals at the moment. And lenders, they want to lend money because that's how they make money. And so they're looking at creative ways. And you'll see when we go through this, there's some actually quite creative ways that lenders have reduced rates, but they've got sneaky little fees hidden in there. So you need to consider all of that. So first off, let's look at the residential market because that's the bigger chunk of the housing industry. Now, one thing I would say is I think these rates, while high and much higher than you may be used to, they are going to have some impact on house prices because this is going to save some people's bacons. You see, there's deals out there that if you have just got a standard deal and you can afford it, you can get a higher rate and it's better than it was a few months ago. But if you're really stuck, there are also some deals that might help you here as well. So I want to talk about those. So first is one of the best deals that I found on there for the residential market at the moment is with Virgin. So Virgin Money. And Virgin Money have a rate which is pretty good, which is 4.82%. That's fixed for 5 years. And the fees on that are pretty good as well, £1,295. Now, what I want to say about this one is that last month we were talking about rates dropping below 5%, and that was the headline that got people's attention. But some of those deals were 10-year deals. Now they're dropping into the 5-year category because it's not likely that interest rates are going to stay high for 5 years. They might stay high for at least another year. Who knows for sure? Nobody. But this is good. And so now we've got a 5-year deal that's under 5%. This is going to be good and help a lot of people, which is really important. Next, one company that does a lot of stats, we follow them a lot, Nationwide. So what's the Nationwide offering at the moment? They've actually been in the news a lot this week because they've actually dropped their rates twice in a week, which was interesting. So they're getting more and more competitive. They've got a rate that you can grab at 4.84%, which is pretty good. The fees are lower. So this is where you've got to work out which one works best for you. So £999. And that's pretty good as well. Again, this is a 5-year deal. So that's interesting. So that's a pretty good deal. Now, here's another deal that's got a lot of attention this week. This has been in all the newspapers. And this is a deal where a lender will, it's called Skipton. Now, you have to have an account with them already. So that's one thing. So if you don't, you can't get this. But other lenders what will happen is this creativity is flowing around, and we're seeing other lenders do similar things. So the fact that you might not be able to get this doesn't mean that your lender might not follow suit. So this is a good upfront headline rate. It's 3.35%. A lot of people are looking at that thinking, wow, really, really good rate there. What's the catch? The catch is this. The catch is that there's a 5% fee. It's 5 years as well. Now, that's the catch. So that's making that rate nearly 8% rather than 4.8%. So there's a big catch there. Now, I still think this is a good deal, and here's why. Because some people, they might not be able to afford the mortgage at the 4.8%. So they could take the little bit of the gamble and they could put this 5% fee, like it goes on to the loan amount anyway, and this would bring down their monthly payments. So there is people in the market that they're not really worried about how much money they owe. They're more worried about what's their monthly payment. This is what you've got to really understand here. This deal could help some people that might not be able to remortgage their property if a deal like this didn't come along. So it's potentially a good offer. And so that's why I don't discount these kind of deals. I think they're potentially useful for a lot of people. So that's the residential market. Great movement this month. So saw some more deals going down. Good. Next, what's going on in the buy-to-let market? Well, NatWest have got a good deal at the moment. This is a new one as well. And these rates are interesting because they're mirroring the residential market. Often buy-to-let rates are a little bit higher. So NatWest have got a deal that is at 4.84%. And the fees, that's a 5-year deal. Fees, 1,495. That's good because 5-6 months ago there were fees that were like 3,000, 4,000, 5,000. I saw some huge fees. This is a good deal. And so a lot of buy-to-let landlords were getting hit by 6% rates, and they get hit. A buy-to-let landlord gets hit a lot harder because we only pay interest. So it's a huge chunk every month. So if it goes up even a small fraction, it makes a big, big difference. So NatWest have got a great deal here. Yorkshire Bank have got another pretty good deal here. And their deal is at 4.92%, 5 years. And the fees are same, 1,495. Now that is another good option. But I want to give you guys another option for some landlords that really are stuck. And we're seeing, as we've talked about so many times on this channel, record numbers are leaving. I read an article again today, which I'll do a video about soon, that even more landlords are leaving the market. As in, we've already had 30%, and of what we've got left, potentially another 20% are considering leaving, but just because there's not clear legislation. Is the EPC stuff going to come back? All of this stuff is worrying for some people. But if you set it up the right way in a limited company, then you don't have so many sleepless nights, I'll tell you that. Next, this is a lender. I use this lender. I haven't got this rate myself, but they're called Land Bay. Land Bay. And they have a rate that is 3.49%, which is important because it gets your monthly payments down. So that's the important thing here. And it's similar to this Skipton one where you've got a 5% fee. I don't have a problem with that. If this allows someone to keep their property, to keep their cash flow, then I would expect in 5 years, yes, the market might go down, but in 5 years, should the price be 5% higher? Probably. Does it mean that you could buy a new property and add value as long as you can add more than 5% value in there and you buy at the right price in the beginning? I think those kind of deals are good if it helps your deal stack up. This is important to understand. I wouldn't, look, if I've got the option to go for the 4.84 or the 3.49 over 5%, if I've got the option, I'm going for the 4.84 all day long, 100%, right? However, if the deal doesn't stack up, I've already got the property and I'm potentially going to lose it because the cash flow is all going to get wiped out. Maybe the house price has gone down, the rent hasn't moved enough. I've got this 5% option fee here. I would take that to keep the property just to hang out in the market until things recover. So that's what's going on in mortgages at the moment. It's interesting. It's interesting to see the buy-to-let stuff is similar to the residential for sure. It's interesting that in both of those sectors, there are deals with much lower interest rates where you can put a fee on it and kick that down the road. Now, there has been some backlash for Skipton for that deal. Landbay, not so much because they're not a big lender, right? But Skipton's got some backlash for that deal. But personally, myself, I think if it gives someone an option and their broker's going through it and they fully understand what they're getting into, I don't have a problem with it. If it allows someone to keep a property, then I think that's a good thing. I think it is a good thing in my opinion. Now, could it be a better deal than that? Yeah, of course. Deals are getting better. Let's see what happens next month. Let me know your thoughts and opinion on these types of deals. Where do you think deals are going to end up, even with no interest rate drops from the Bank of England? Comment below. Let's have a conversation about it. Do smash the like button, guys. That'll take 2 seconds. Go on, smash it over there now. Subscribe and hit the bell. Let me get 10,000 subscribers by Christmas, please. And let's try and get 1 million views in total for the channel this month. Anyway, while you're here, go and check out another video. Why don't you go and watch this one right here?